In today's episode, I'll talk about two very interesting stories. In the first story, I'll talk about how the Indian government has recently provided a much needed breather for Vodafone Idea. And in the second story of the day, I'll discuss what is exactly happening with Donald Trump's tariffs. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy to understand, yet one level deeper as compared to traditional news channels. I'm your host Anurag Bansal, and today is Wednesday, the 27th of November. Let's begin with our first story. Look, the Indian government recently announced a much needed breather for the telecom sector, particularly for Vodafone Idea or VI. The Union Cabinet basically decided to waive the requirements for telecom companies to provide bank guarantees for the spectrum that they bought before 2022. Now, for Vodafone Idea, this move could basically free up more than 24,700 crore rupees, and you can imagine how significant that amount of money is for a company that has been struggling to stay afloat in the first place. So in this story today, let me break down what is exactly happening over here and what it means for investors like you and me. Let's start with the basics first. Imagine you borrow money from someone, but they don't quite trust you to pay it back. So you ask your bank to step in and promise that if you fail to pay the money, the bank will pay it on your behalf. Now, this particular promise is called a bank guarantee. Now, in the telecom world, companies like Vodafone Idea buy spectrum from the government. These frequencies are essential for wireless communication like making calls or even accessing the internet. Now, the government usually lets telecom operators pay for this spectrum in installments over many years. But in order to ensure that companies do not default over here, the government also asks them to provide a bank guarantee or a BG. Now, the catch here is that the banks do not quite offer the bank guarantees for free. Telecom companies usually have to park a significant amount of cash or equivalent collateral to the bank in order to secure these guarantees. Now, for a cash-strapped company like Vodafone Idea in this case, this ties up money that could otherwise be used to improve their networks or to repay their debt. Now, the government's recent decision waives off these requirements for spectrums that were bought before 2022. And this means that companies can now use that money which they had earlier set aside for BGs in order to address other pressing needs like reducing debt or investing in their infrastructure. And by the way, if you're wondering, this is not the first time the government has stepped in to ease the financial burden on telecom operators. Back in 2021, the government had already removed the BG requirement for spectrum bought after 2022. But the thing is, older deals over here were still under the old rules. But after repeated requests from telecom operators and the industry body COAI, the government extended the same benefit to pre-2022 spectrum deals. Now, for Vodafone Idea specifically, this could not have come at a better time. The company has been in deep financial troubles for many years now. They have mounting debt, shrinking market share, and a weak competitive position. And if you're wondering how Vodafone Idea really ended up here, let me quickly explain. Look, Vodafone Idea was not always struggling. When Vodafone and Idea merged in 2018, they created India's largest telecom operator and commanded over 408 million subscribers, which is about 35% of the market share. But the thing is, this merger was not born out of ambition. It is actually born out of necessity. There were a series of tax troubles. Now, in 2007, Vodafone acquired Hutch in order to enter the Indian market. Many years later, in 2012, the Indian government introduced what is called a retroactive tax law, and they demanded 22,000 crore rupees from Vodafone for that particular deal. Now, this tax battle dragged on for many years and drained all of Vodafone's resources. The other reason is that there were old equipments and high costs. And why I say this is because Vodafone and Idea had been in the market for many decades, and they were therefore relying on aging infrastructure, which was also expensive to maintain. And of course, since there were also financial constraints, it meant that they could not modernize their networks fast enough as compared to the others. The third reason is Reliance Jio's entry in 2016. Now, this is a no-brainer. This was almost like a game changer which disrupted the entire industry with free voice calls and ultra-cheap data. Now, in order to compete, players like Vodafone Idea, etc. had no other choice but to slash their prices, which cut into their already razor-thin profit margins. The next reason is the burden of spectrum costs. See, spectrum, which you can think of as almost like the invisible backbone of wireless communication, is auctioned by the government for billions of Indian rupees. Now, companies like Vodafone Idea pay for spectrums over multiple decades, like I mentioned, and this creates a long-term debt burden for them. For VI specifically, these costs became very overwhelming. The fifth reason is the AGR dispute. See, AGR stands for Adjusted Gross Revenue, and this is a metric that the government uses in order to calculate license fees and spectrum usage charges. Now, telecom companies started to argue that AGR should only include revenue from core telecom services, but the government included non-core revenues like interest income and asset sales as well in this. In 2019, the Supreme Court sided with the government over here, and Vodafone Idea suddenly had dues worth 58,000 crore rupees. Now, this of course was a major blow for a company that was already struggling with debt. By 2021, Vodafone Idea's debt had increased to 1.8 lakh crore rupees. And to make things worse for them, their subscriber base was shrinking and it reached 253 million. Also, its ARPU, which is the average revenue per user, which is by the way a key measure of profitability, was amongst the lowest in the industry. Basically, Vodafone Idea was stuck in a vicious cycle of sorts. It could not invest in better networks due to the lack of funds. Poor networks led to customer dissatisfaction and the loss of subscribers. And of course, fewer subscribers meant even lower revenues. Now, of course, as a result of this, Vodafone Idea's stock fell down quite a bit, and the entire telecom industry started to look like a two-player race that is dominated by Reliance Jio and Bharti Airtel. But then the government also recognized the state of the industry and they introduced several new measures. First, they introduced moratoriums in 2021, which is a 4-year break on AGR and spectrums, and this gave telecom operators some breathing room at least. The second thing they helped with was equity conversion in 2022. Look, Vodafone Idea converted 16,000 crore rupees of interest dues into equity and made the government its largest shareholder with a 36% stake. But despite all of these measures, Vodafone Idea's fundamentals still continue to remain weak. Banks were hesitant to lend and the company was lagging in 5G rollouts as well, and this put long-term competitiveness at risk. Now, this recent bank guarantee waiver is certainly a significant relief for Vodafone Idea, but the thing is it still does not solve all of its problems. Vodafone Idea still faces some really difficult challenges. The company's liabilities exceed 2 lakh crore rupees today. Servicing this debt while investing in new technologies like 5G will be a great battle they'll have to fight. Second, Vodafone Idea even today continues to lose customers to Jio and Airtel, both of who are investing heavily in network expansion. The third thing is that while Jio and Airtel are racing ahead with 5G, Vodafone today is struggling to keep up due to all of its financial constraints. So today, Vodafone Idea probably needs a combination of strategic investments, operational improvements, and perhaps even a touch of luck to come back. The government's latest move is definitely a step in the right direction, but Vodafone Idea's journey towards stability is certainly far from over. With that, let's move on to the second story of the day and talk about how Donald Trump is now back in the news, and this time he's making headlines for his favorite topic, which is tariffs. In a post on the social media platform Truth Social, the upcoming US president announced his plans to impose hefty tariffs on goods coming from 3 major trading partners: Mexico, Canada, and China. According to Trump, he says that these particular tariffs will go into effect on his first day of office, which is January 20th, 2025. Now, in case you're wondering, these 3 countries are not just any trading partners. Together, they account for about 1/3 of all the trade that involves US, and it represents a staggering $1.8 trillion in annual commerce, and it supports nearly 17 million jobs. Now, by any stretch of imagination, that is a huge chunk of any economy. So you can imagine why markets, businesses, and the analysts are paying a lot of attention to this, and why many people are also very worried about it. But the question here still is, what does it exactly mean? Why does this matter? And why are Trump's comments causing so much of stir up on the internet? See, to get a full picture, let's take a step back and look at how trade works between these countries and why his proposals could shake up things in a big way. Look, the United States, Mexico, and Canada have been very close trading partners for many decades now. They are bound by agreements which make it very easy to do business with each other. Now, the foundation of this partnership was laid back in 1992 with a deal called the North American Free Trade Agreement, or the NAFTA. Now, this agreement eliminated many taxes, which by the way are also called tariffs, on goods that were traded between these particular countries and reduced the red tape involved in cross-border trade. Now, in 2020, Trump replaced the NAFTA with a new deal called the US-Mexico-Canada Agreement, or the USMCA. Now, he presented this as one of his big achievements during his first term as the president. Now, the USMCA kept the essence of the NAFTA intact, but they updated some rules, particularly around labor standards and also digital trade. Now, these agreements have today turned North America into a very tightly connected economic hub. Factories and supply chains now span across 3 countries. For example, many cars made in Canada use parts manufactured in the US and in Mexico. And Mexico has become a hub for producing textiles and electronics for the American markets. Canada and the US also have very strong ties in energy, with oil, metals, and critical minerals flowing between these two nations. Now, this interconnectedness is not just about convenience if you're thinking about it. It is actually the backbone of many industries, including the likes of auto, textiles, energy, and even manufacturing. Now, over the last few years, Mexico has started to emerge as a particularly important player in this partnership. As of late 2023, Mexico became the largest trading partner of the United States and had a 15.8% share of US trade. You might question why Mexico has done so well. There are two main reasons for it. The first one is US-China's trade war. See, during Trump's first presidential terms, he imposed very heavy tariffs on Chinese goods and made it expensive to import products from China. Businesses started looking for alternatives as a result of it, and Mexico, which was of course the closest to the US, was an obvious choice for them. The second reason is the COVID-19 pandemic, of course. See, what the pandemic did is that it highlighted the risks of relying on long and complex supply chains. Post the pandemic, companies started to adopt a strategy called nearshoring, which in simple words means sourcing goods from nearby countries instead of far off places like China in the case of US. Now, Mexico, with its very large labor force and also proximity to the US, became an ideal substitute once again. But what's particularly interesting here is that Mexico today has also become a gateway of sorts for Chinese goods to reach the US. Many Chinese companies have set up factories in Mexico. They ship parts from China, assemble them in Mexico, and then they export the finished products to the US. Now, thanks to the USMCA rules, these products are often labeled as Mexican and they enter the US tariff-free. To give you an example, Chinese electric vehicle maker BYD produces cars in Mexico and ships them to the US. These cars qualify for tax break under the American laws, which save both the company and consumers a lot of money. Now, what Trump is proposing this time around is to impose tariffs on Mexico, Canada, and China, and this could cause major disruption. For Mexico, tariffs on Mexican goods could rip apart the supply chains that connect all these three countries. To give you an instance, the auto industry heavily relies on Mexican factories for parts and assembly. A tariff over here would drive up costs for American car makers pretty significantly. Car makers like Tesla have already paused investments in Mexico because of this very uncertainty. If you talk about Canada, Canadian industries like aluminium, oil, and uranium are very deeply tied to the US economy. Tariffs over here could hurt these industries and could also disrupt American supply of critical resources. If you talk about US businesses and consumers, if tariffs are imposed, companies will have to find new suppliers, and this could happen at likely higher costs. And these costs will of course be passed on to consumers eventually, which means everything from cars to electronics and everything else in the middle could become more and more expensive. So in short, breaking apart North America's trade system could create a lot of chaos. It could drive up prices, cause job losses across industries, etc. It is a very risky move that could certainly have a chance of backfiring. Now, it's very hard to say if Trump actually plans to follow this through or if it is just a negotiating tactic of sorts. There is a major review of the USMCA agreement that is coming up in the year 2026, and over here, all these three countries will together decide whether to keep it, change it, or scrap it altogether. There is a certain possibility that Trump over here may be using these threats in order to gain leverage in these particular talks. But in case Trump does go ahead with these tariffs, the consequences could very well be huge. North America's tightly integrated economy might unravel. Businesses and industries would face years of uncertainties and higher costs. The US would struggle to compete with other global trading blocs like the European Union or China. But on the other hand, if this is just a bargaining chip for Trump, he might quite be betting that the threat of tariffs will push Mexico and Canada to agree to more favorable terms for the US. But either way, his comments have already sent some shockwaves through the markets, and the world will definitely be watching very closely to see what happens next. But for now, one thing is very clear: trade relationships in North America are entering a very uncertain chapter. With that, let's move on to the final section of the day and talk about the quick news headlines. First, Hindustan Unilever Limited or HUL is planning to separate its ice cream division, which includes popular brands like Quality Walls and Magnum, into a standalone listed company. Now, this strategic move is aimed at tapping into India's growing demand for ice cream while also boosting shareholder returns. This decision follows a challenging period for HUL because it missed profit expectations for 4 consecutive quarters. Second, Adani Group is currently dealing with serious bribery allegations which have led to halted investments, falling stock prices, and cancelled international contracts as well. While GQG partners continue to support the group, the increasing number of allegations is taking a toll on Adani's finances and its reputation. Third, gold sales have jumped 40% year over year, fueled by festive buying sprees and economic uncertainties as well. Jewelers like Tanishq are capitalizing on this demand by partnering with quick commerce platforms to order 10-minute deliveries. They are largely focusing on small gold coins here. Now, this blend of instant luxury retail and convenience is driving this trend quite a bit. Fourth and the final one for the day, the cabinet has approved the 1435 crore rupee PAN 2.0 project in order to modernize India's taxpayer identification system. Existing PAN cards will be upgraded for free with QR codes in order to streamline services and to also improve grievance redressals. This project aligns perfectly with the Digital India mission, and it aims for a more efficient and paperless tax process. That's all the news and stories I have for you today. I hope you found value in this episode and probably learned something new. If you have any thoughts to share, please share it in the comments down below and we would love to discuss and interact with you. As usual, this is your host Anurag Bansal signing off. I'll see you in tomorrow's episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.